The American president is back to his tariff hikes again. He recently announced a rate increase on the EU to 30%, coming into effect on August 1st. The US and EU are each other's largest trading partners, with bilateral trade totaling €8.1 trillion. The European Commission president declared on Saturday that the EU will refrain from implementing the trade countermeasures it has developed until the US carries through with its threats. In the rest of North America, the US president has announced a 30% tariff on Mexico and a 35% tariff on Canada, both to come into effect on the 1st of August, perhaps Liberation Day too. Despite the higher rates, some Canadian exports may be shielded from the tariffs under the Canada-US-Mexico agreement. However, of the US's two neighbors, Mexico will probably be hit hardest, as 80% of their exports are sent to the US. The president's tariffs have not been limited to Europe and North America. Other countries that he has raised tariffs on include Japan 25%, South Korea 25%, Kazakhstan 25%, South Africa 30%, Laos 40% and Myanmar 40%. The American president has warned that responding to the tariffs with tariffs will result in the US's tariffs increasing again. The leaders of the nations and blocs affected by the hikes have all expressed their dismay, but vowed to continue trade negotiations with the US. Economists have warned that the rises could cause disruptions in supply chains, like they did after Liberation Day, raise inflation and destabilize North American trade under the USMCA. Asian markets seemed unfazed by the announcements, with Japan's Nikkei recovering quickly after early losses. Meanwhile, Wall Street's S&P 500 dropped by almost 1%. Despite fears of putting the U.S. economy into recession, the American president has defended the tariffs as vital for tax cuts and for supporting U.S. manufacturing. So far, the tariffs already implemented have been successful in bringing in over $100 billion, and in June the customs duties brought in a net $26.6 billion to the federal government. I think there are several reasons that the markets have not overly reacted to the tariff increases. First, markets have already adapted to his base tariffs and are not as reactionary to further increases. Second, there is still a window of opportunity to negotiate trade deals and avoid the implementation of the tariffs. And third, after the failure of the last Liberation Day, and the American president backing down on the implementation of his plans, there is reason to believe he will back down in this round as well. The problem is that this time the tariffs are not as extreme and are unlikely to cause the same market uproar that got him to back off previously. Ultimately, the push for raising money through tariffs is part of the US president's bid to balance the federal books as he cuts taxes on people like himself. His efforts to emulate former President McKinley's McKinley tariff and bring back American manufacturing cannot work if he's simultaneously trying to primarily fund the government through taxes on imports. If he is successful in reigniting American industry, then there will no longer be the supply of imports to tax and the government will no longer be funded. He and his entourage haven't understood what McKinley was trying to do, or that the McKinley tariff lost the Republican Party the general election the same year that it was implemented.